Hey everybody, we're about to look at the chart and see if the stock market actually about to crash. Because things are starting to look kind of crazy out there. So I'm going to try to give you an answer in this video. Check this chart out. So the first thing we're going to do is look at that monthly chart. Because when you want to know what's about to happen in the future, maybe a week or 2 weeks ahead of time, you gotta look at the monthly chart. You can't look at the 15, the 30 minute, 1 hour, or even the 4 hour. You gotta look at the monthly chart, the weekly, and the daily. Let's see if we can find any trends or any kind of patterns that can tell us if the stock market is about to go down or not, or is it about to be a crash. So the first thing I see is this red candlestick right here. This is where we're currently at right here. And the first thing I see is a red candlestick at the top. It's not a regular red candlestick where it's somewhere in the middle of a run. This looks like it's at the top and it's starting to come down a little bit. We had 6 months of green candlesticks, and now we have a red candlestick at the top. This is the SPY chart, by the way. Look at this because it has a lot of AI and tech stocks, the Mag 7. It's a good indicator if the tech sector is about to go down, because right now the market is pumped up from the tech and AI. So the best thing to look at is the SPY chart. So let's look at the chart and see if we can see any other trends or any other kind of patterns that can tell us what's going to happen next. The reason why I say the stock market is not really in a great situation because we have a red candlestick at the top at certain areas on this chart that also created a downtrend after the red candlestick was shown. So for example, here's one right here, and then followed, we had 2 months of green candlesticks. The price pretty much stayed stagnant, and then we had a big downfall. That was in March and April, and then we had the nice 6-month uptrend. Then here we go again, another red candlestick at the top after a 5 month of green candlesticks. Then we went down 3 months straight of red candlesticks. Here we go again, another red candlestick at the top right here. And then after this red candlestick at the top, it wasn't all red candlesticks going down, but we had a nice downtrend from 456 all the way down to 332. And one more example, red candlestick at the top, and then we had 2 months straight of downtrend. But what do you see after these downtrends of red candlesticks? We came up again. We had 3 months of down, then went up, and then went up a lot. This one was a pretty long downtrend in January 2022, went down for several months. And then we came up a lot from that because we're going down so much. Then we came up. We did have a small hiccup right here, but after 3 months of downtrend, went up a lot more. 2 months of downtrend, went up a lot more. So now we're here at the top, red candlestick. The chances of us going down from here based on this candlestick are pretty high. I'm talking about like 75% to 80% chance that we start a downtrend. Maybe a 1 month, could be a 2 month, we don't know. But we could get a downtrend right here, starting here. 75% chance, in my opinion. Still not saying the word crash because that's a lot stronger than a downtrend. If it's a crash, we're talking about a lot of this gain right here taken away. If it's a crash, maybe it will go all the way down to like 583 or 548 or even the 487, 490. That would be kind of a crash right there. But if we see a downtrend in the market because of the AI tech, we could possibly see us going down to the low 600s or the high 500s, 580, 590. But we don't know what's going to happen yet. Will it be a crash or a long downtrend or a short downtrend? But based on what I'm seeing right now, it's a 75 to 80% that we will get some kind of downtrend from this red candlestick. This is a confirmation that a downtrend is probably about to come. This is the monthly chart. So this red candlestick at the top is going to be pretty huge. But when we look at the weekly chart, we don't see a downtrend yet. We do see 2 weekly red candles that's kind of stagnant and starting to come down, 589 high and starting to come down. But we don't see a downtrend yet. That's why I said maybe a 75 to 80% chance because it's not here yet. We don't see it. It's pretty early to give 100% confirmation that the market's about to go into a downtrend because we don't see it yet on the weekly chart. And it's definitely too early to say, oh, it's going to be a crash. To get a confirmation for a downtrend or a crash, first we need to break this area right here. We need to break this 670. Once we break this 670, we're going to need to break this 652 area. Once we break the 670 to 652 area, I'll probably say about 90, 95% we're going to get a nice downtrend, right? A nice downtrend for SPY and the tech. If we break the 675, the 650 area. Now, if we break the 617 area, then we can start saying that it may be a crash because 617 is going to be a strong support for SPY. So we have 675, 652, and 617 for support for the AI tech industry. Now, if we get a crash, like I was saying earlier, then we're talking about a 604 area trade or a 590 to 587 area. This area right here is going to be the crash area if we start to crash. If we go into a downtrend, a short one will be around the 650. A long downtrend would be support around the 617 to 650 area. Somewhere between this area right here would be a long downtrend. A short downtrend, maybe down to the 650 area, 640. So that's what we're looking at as far as a crash or a downtrend for the AI tech. The daily chart, as you can see, doesn't look good at all. We're talking about 1, 2, 3, 4 red days, and we have a big gap right here going down. A lot of people are selling and panic selling. We're talking about institutions selling, and we're talking about retail selling. And as you can see, that 670 support is right here, and we have that 652 support right here, right where that lower Bollinger Band is at. MACD hasn't crossed the blue line yet to give a signal of strong downtrend. The RSI hasn't went below the 50 yet, but it's getting close, 53. And lastly, we're going to look at the 4-hour chart, and as you can see, the downtrend starts at 689 and it comes all the way down. It just comes all the way down there for the downtrend for SPY. So tomorrow, what we're looking for is, will it hold that 670 support? Or maybe Thursday, will it touch that 670 support? Or will it go back up? Now let's check out the resistance. We haven't talked about that yet. For resistance for SPY, to show that, we're not going to a downtrend, first thing we need to break is going to be the 680. Once we break the 680, it could bring more confidence to the market. After the 680, we're talking about the 685, 686 area. We got to break this one, and then we got to break this resistance. Once we break those two resistance, people may start to get more confidence again in the market. But right now we're at 675. We're right in between that 670 support and that 680 resistance. And when you look at the news, people use some strong words like crash because they want to get attention when people click on the article, right? It says U.S. stock market crashes today. It's not really a crash, right? It's just a downtrend. A crash will be much bigger than this. This article says the famous Wall Street crash indicator just flashed again today. So that could be a warning of possible crash. It doesn't mean a crash happened or is going to happen, but it's an indicator that it could happen. And as you know, Michael Burry, who predicted the 2008 housing market crash, he pretty much saying that the market is about to start to go down now. Wall Street falls as bank CEOs warn of possible pullback, sparking tech bubble jitters. So people are panicking. And this news actually came out yesterday about the banks warning of a possible pullback. It says 2 hours ago, but it came out yesterday. So a lot of people knew that stock market was probably going to fall today because of the bank's warning of a pullback. And to get a little better indicator of a crash on this chart, right? This is for January 2017 to 12/08/20. On this chart, I would say this could be considered a crash right here, way up here, then come all the way down. But as you can see, came back up again, right? It broke this resistance right here and it kept moving up. And this would also be considered a crash as well. Way up here, they come all the way down. It didn't stay down too long. So if the market does crash or it turns into a long downtrend, it could be an opportunity for investors to buy more shares, because in the long run, AI and tech is going to be in the future and there's nothing you can do about it. Nowhere you can hide from AI and tech, and it's going to be a good way to buy more shares if the stock market does go into a long downtrend or crash. It came from way up here, it came all the way down here. If you bought down here and held, you're in good shape, right? You're in very good shape. Probably a lot of millionaires were created from this downtrend and uptrend. So a long downtrend or a crash is something bad temporarily, but you buy that dip on the right companies, you'll do really, really well. All right, everybody, if you enjoyed this video, you got a lot of information from it, subscribe, comment, and like, and I will make plenty more videos after this one. Take care.